In the equity quadrant, taking a look at the June Nasdaq futures, which had a very quiet morning and held a decent rally through midday as we approached the FOMC rate decision. Post FOMC, the Nasdaq moved higher for the third session in the last four and the fourth in the last six, at least through today. The high today was 19,958.50, which was up about 1.3%, and the low was 19,660, which was down 0.21%. With a little bit of time left in the session and things still very volatile, the post-FOMC Nasdaq is still up about 1.15%. At the midpoint of the week, Nasdaq continues to work on the first positive week of price action in the last 5 weeks. The Federal Open Markets Committee decided to leave rates unchanged, and that was expected, but markets were really focused on the statement and the press conference. Some highlights. Starting in April, the Fed will slow the pace of its balance sheet reduction, lowering the monthly redemption cap for Treasury securities from $25 billion to $5 billion, while keeping the cap for agency mortgage-backed securities at $35 billion. Fed Governor Christopher Waller dissented, voting against lowering the redemption cap. The FOMC still maintains future cuts are expected via the predictions in the dot plots, which is officially known as the Summary of Economic Projections, or the SEP. They lowered their GDP projections, slightly increased their unemployment rate forecast, and slightly increased their inflation forecast. This is enough of a mixed bag to allow the Nasdaq to hold its early bid. The Nasdaq's been outperforming lately, and you can see since the bottom of the corrective move over the last 8 sessions, the Nasdaq has outperformed the S&P and the Dow, although the Russell has outperformed all 3 of them. For today, at least, the Nasdaq outperformed the Russell as well, but active investors need to be careful overemphasizing the move in today's late day trade of the Nasdaq itself.